G'day there. Welcome to the closing bell on the 5th of July for me, around midday. And, well, I'm guessing you know that I'm not at home right now. I'm actually up in rainy Sydney visiting my parents and going to be chopping some firewood for them this weekend, which will be fun. And today I'm really just having a look at really the outperformance of the real large caps, and just to give you a sense of what's going on, I guess, because people I know you're probably reading people talking about the market breadth really looking pretty bad at the moment, with only about a handful of stocks in the US really creating all the gains, and most other stocks sort of treading sideways. In our market, the ASX 200, I mean, that's been really flatlining over the last few months. So it's sort of a weird situation where the market's trending higher in the big picture, but there's not a lot of momentum, and many stocks are still in the doldrums, and especially in that small cap space. So it's a pretty difficult market to be finding winning trades in. You've got to be a bit careful out there, I think. And I mean, maybe you are, scratching your head with the investments you've got and saying, well, the market's near the highs, but my stocks certainly aren't reacting. Don't worry, you're not alone on that front. I think the indices aren't really giving you a sense of what's going on, and perhaps it's a bit of a sign if all the money's flooding into just a few stocks. Is that like a final blow-off sort of move? People searching for a home for their money, but most stocks not really performing with interest rates high. Is it a bit of a canary in the coal mine that we just need to have in the back of our mind that could end up sort of reversing soon? All right, so let's jump to the charts. So this is a chart of the S&P 500, which is that orange line you can see there, and I've also got the S&P equal weighted index, so that's the blue line. And the equal weighted index is just saying, what if you invested the same amount of money in all of the stocks? So rather than it being the large stocks having a bigger sort of influence on what the index does, you're saying there's 500 stocks, let's say, and we're investing the same amount in each stock. What would happen in that case? So it gives you a sense of, the difference between performance of the large cap to smaller cap stocks. And you can see there from, 2012, near the start of the rally, this equal weighted index and the S&P 500 itself really tracking each other quite closely all the way through there for years and years. Now, you can see that after the 2020 crash, there has been sort of the start of an outperformance, hasn't there, of the larger cap stocks. So you see there that orange line being the S&P 500 is just sort of tracking a bit higher than the equal weighted index, just saying that there's a bit more money flowing into the larger cap stocks. So that outperformance has been going on for a while, but they're tracking each other pretty closely. I just want you to note what's been happening since sort of the middle of 2023. So over this last year, how the market has been performing. Look at this. It really is starting to pull away massively from that equal weighted index, isn't it? I mean, the level of outperformance now is getting quite really amazing, isn't it? I mean, look at the gap opening up between that equal weighted index and where the S&P 500 currently is. So you'll know, with the ASX 200, it's a similar story where the price isn't that far above the highs that were made in sort of 2021, 2022. So you can see there that equal weighted index really not breaking out in any fashion from that high. So we've had the correction over the last year or two, and really the rally has just brought it back to the high. and it's really flatlining at the moment, just like the ASX 200 is. So our ASX 200 really tracking that equal weighted index more than the S&P 500 itself, which is really broken out and is trading under its own steam, isn't it? It is so far away that this is where that feeling of the market breadth and the that can be an instability in the market when there's only a few stocks creating all of the gains. It's showing you that there is actually an issue beneath the surface, and that's obviously interest rates being high. A lot of companies probably struggling a little bit with interest rates so high, the consumer pulling back, discretionary spending probably pulling back. So, there is areas that won't be powering at the moment, but those tech, the top stocks, the AI, that sort of thing, really creating all of the gains. And, for Australia, we don't have a lot of exposure to that. So that's why you're seeing in our market, it is more like that equal weighted index, just still tracking around that high from a few years ago and not looking that sort of impressive. And this is where, just in the back of your mind, saying, well, is this huge gap that's opening up, is that a bit of a warning sign that what we're seeing is a bit of a blow-off rally in these stocks that may actually reverse and sort of go back to meet where that equal weighted index is? So that's just my fear. I'd really want to see the general market conditions turning up and to have some sort of meeting, things getting back. You can see here, they really have tracked each other for years and years and years. So what's going on at the moment is really an outlier. And that's why when I'm analysing the market for you, showing you the S&P, seems a bit weird, doesn't it? That the S&P just looks so strong. And you'd say, well, everything should be fine and looking great. But we're just not really seeing a follow through in our market, are we? So I think this gives you that real sense that it is quite a strange set of sort of conditions that is happening at the moment. And for me, it's just in the back of my mind thinking, well, I've just got to be a bit wary, that there really is just a few stocks creating all of the gains. So when we flip to this S&P 500 chart and you look at it, it is powering, isn't it? And there's just nothing stopping it. So if I'm just analysing the index itself, and this being the monthly chart, looking at those long-term trends that turned back up around mid last year, and setting off that chain reaction, breaking out through the all-time high, monthly bars marching higher. There was a bit of a correction a few months ago, but couldn't really be stopped. And at the moment, it is just powering, isn't it? Holding above that 10-month moving average, going to new all-time highs. There's just nothing there saying that this rally is anywhere near over. And we really do need to see it a lot lower, say below that 10-month moving average for starters, before you're really getting nervous. But it's just not showing really what's going on underneath the surface. So that's why the only thing that has me wary is the fact that most of this is, just a few stocks. But why can't it keep going? That's why you look at the charts. You say, right, well, I'm not going to get too concerned until that does actually start keeling over. And I'm really just going to quickly repeat myself on that ASX 200, just in case people, missed out on the last few closing bells. This is again the monthly chart. Our market really not looking that flash compared to what the S&P 500 is doing. We know that, but it is in long-term uptrend. It is holding above the high from 2021, so that's all positive from that point of view. And as long as those conditions remain, you've got to be hopeful that this thing can actually break out again to an all-time high and continue trending. So that really is how you have to be positioned. But you're just aware that we've had 4 months now of just going nowhere, holding, just above that high. So it's not breaking out with a lot of momentum. And if that momentum fails, and really have been saying, back below sort of 7,500, look, a monthly close below there, it just looks a bit different because it looks like a false break of a major high. And that's when you start getting nervous. So, pretty good line in the sand that's quite close to where current trading is. And that's really the best I can do from here is saying, look, allow this long-term uptrend to continue, be positioned for it to continue, but monthly sell pivot, closing back below 7,500, something like that, and all of a sudden it's saying, well, watch out, we're in for a bit of a mean reversion period before deciding what to do next. So really, the state of the market is just let it go. Let's hope this end of June selling is over, and it won't take much for it to look pretty good. All it has to do is head back up above that sort of 8,000 level, and there's no reason not to be nice and bullish. But just following up now on some gold stocks, we've been sort of following them for the last few months, haven't we? I've thrown out a few for you recently. We looked at Resolute Mining, RSG, and you'll possibly remember I told you about that around the 43-cent region, and looking at the momentum turning back up, and we'll look at the monthly chart to give you a sense of what I was looking at there. But you'll see, told you about that around 43 cents. That's up around 60 cents, and this is a weekly chart, so it's only a matter of months, and it's up nearly 50%. So that really is powering. I also gave you Regis, which hasn't been performing well. That one still pretty weak, and really do need it to turn up above that sort of 230 to 250 region, and all of a sudden it can look a lot better. But it's unhedged now. You'd think with a strong gold price, why is it so weak? It just can't lift its head at all. So I think some obviously big shareholders just happy to get out of that one because it has been an underperformer, and people maybe don't like the numbers on McPhillamys. So that one, it's still, I think I gave that to you around $2. It's $1.77. So that's not down that much, but RSG up nearly 50%. And last week I was telling you about De Grey, and we were looking at this one, this being a weekly chart showing you here. I was just telling you about the fact that it had raised some money, which is why it had been underperforming other gold stocks over the last however many months. So while gold's been rallying higher, De Grey, with their huge deposit, and still a long way from getting up and running, of course, but they have really been underperforming. And then they had their capital raising around $1.10, so there's been a bit of a sell-off into that, bit of indigestion for a while. And I was just looking at this wave higher up to around $1.70, and then just really calculating the buy and sell zones of that whole wave. And you can see lots of work done, the retest of the point of control there, rally up into the sell zone area, rejected again, and then sort of oscillating down into that sort of buy zone area. And that's where you're sort of looking for reversals that can be worth jumping on. And another factor I was telling you about last week was, once you have sort of a period of sort of, not really going anywhere for a while. That's, quite a long time, half a year of rallying in there. There's a lot of buying going on in there, and a lot of those buyers will have stoppies just below, the low of the whole range. So that's where you can often get, a series of stoppies going off, shaking people out of their position, going down into the buying pressure. And then once it turns around, there's a weekly buy pivot from last week. I was saying, look, this is looking ripe to rally because the capital raising's been done, and the stoppies have gone off down into buying pressure, and it should sort of rally from there. So not a bad week this week. I'm sort of opening around $1.14, going up to $1.21, and you can see there that $1.21 right on the midpoint. So that red line being the midpoint of that whole wave higher from sort of January 22 to early 2023. So that's sort of like a gravitational point that prices will oscillate around, I guess. So, not a bad little start if you did jump on a few of those, just giving you a sense of how, sort of reading the market like this, working out where the buying and selling pressure should be, and, understanding where the stoppies go off, and which can sort of give you a nice entry point as soon as momentum turns back up. So gold also looking all right. So let's have a quick look at that. So the gold price really quite resilient, even though it's had this huge run, breaking out of a sort of 3-year range, that being the top of the range there, around sort of 2080. And, it's been a really powerful run after sort of being rejected from those highs over and over since 2020. So there's been lots of selling pressure over that time from that area, and now here we are in the breakout, and so it's well overbought in the short term. So it can still sell off all the way to retest those highs and bounce. So I'm of the view of not sort of sticking my neck out too far as saying it's going to just keep powering higher here. But it is quite impressive the way it is holding in there up around this sort of 2300 to 2400 region. So from that point of view, still allowing that long-term trend to continue. If we have a look at the monthly, you can see what I mean about just how strong it is. Look how far away it is from the 10-month moving average, really quite strong. If it is going to keep powering ahead, it'll, keep bouncing off that 10-month moving average on corrections. So, it can easily sell off to there and still look fabulous. And as I was saying, that old high there, can even sell off down to there and still look fabulous. So, there's no reason to get too fearful if we do see the gold price pulling back in the short term. But for now, you are allowing this to go ahead. Maybe it can just keep powering ahead here. So, you want to be exposed to a big, strong, multi-year breakout like this. But, yeah, you're still a buyer on the back foot, even if you see a bit of weakness. And there's been a bit of talk about Chinese stimulus. That always keeps cropping up every now and again. They've got all those property problems over there and have had troubles. I think everyone is wishing China to really get things going again. But that did see a bit of a bounce in copper, and oil prices continuing to creep higher. So definitely keeping an eye on those, especially oil and copper, which will really influence, other moves in other metals, of course. And so just, I've been saying to you that oil prices just looking interesting above that sort of $95 region in the Brent crude. And, it has bounced back nicely. Just the simple analysis of this monthly chart was that there's been this, massive rally from 2020, and it's had the pullback to major support. And the question is, is it ready for the next leg higher? And really, this setup, such as it is, the long-term trend just starting to shift higher, is you've got a line in the sand back below $70. Below there, wary of what can happen. I think it can have a sharp wave down to that sort of $30 to $50 or $30 to $45 region if it does get hammered below there. But as long as it holds above this $70 region, this can power ahead. So you're sort of setting yourself up for a potential opportunity where you don't need to risk too much to find out if you're right. And a breakout could see a really nice sort of impulsive move to the top of the range, as we've seen so many times in the past with oil. When it sort of breaks out above this sort of $80, $90 region, it can head up to that 120 to 130. So it's still looking interesting the way it's creeping higher on a daily basis. And I guess if China comes out with some news, maybe that's going to turn things around for copper and oil. And I've seen some bit of buying coming to lithium and rare earths. So maybe we're getting near the end of that disastrous time. I'll just show you Vulcan Energy, which is starting to turn higher. That's the lithium play, geothermal lithium play in Europe, which was bought, like the clappers back in the day when lithium was flying. Look at that going up to what, $17. This is how crazy markets can get, and it's certainly shaken all of those people out. And we've got the buy zone there of that, and you can see it's been a long sell-off. Pretty much anyone who's bought it has been kicking themselves, but it's just starting to kick higher from this buy zone area of this huge wave higher. So if they can get this project up and running, it's from around this sort of zone is where it can often be worth having a look. And monthly buy pivot coming in there, and first key bar here, and long-term trend getting close to shifting. So a bit of buying coming in. Is this ready to start that ascent again to the upside? So that's one worth keeping an eye on. All right, well, I think that's enough for today. Not really that much to talk about with July 4 in the US. Markets closed over there, and things pretty quiet, aren't they? But hopefully a few of you got onto De Grey early last week and are pretty happy with that. All right, cheers. I'll come back with more next week.